Yep, that's me. You're probably wondering how I got myself into this very nice situation. Well, it all started with an idea. Well, let me explain how it all started.
So in this video, I was able to spot two sniper entries that helped my account to grow from a very small account into $1,000 account within a very short period of time. So without wasting much of your time, let's jump right into it. So we are going to start with the $5 account. So with the $5 account, we're going to visit the Volatility 50. So in the Volatility 50, I've put the Bollinger Bands. So if you don't know how to use the Bollinger Band strategy, I will put the link in the description box below. I'm going to put a link of one of my videos that I explained how to trade the Bollinger Bands. So without wasting much of your time, as you can see right now, there was a candle that broke to the downside that touched the lower Bollinger. This means that the market has been oversold. So if the market is oversold, we are now looking for buy signals, but then we cannot simply buy just because we know that the market is oversold. We have to look for strategies that are in conjunction with what you are looking for. So what I'm looking for right now is a buy signal, right? So as you can see, our market is in a downtrend that is not that big, but then it's a downtrend. So right now, as you can see, the market is currently at two levels of confluence, that is the trailing support and also that fixed support that is forming two bottoms. So as you can see, now we have two strategies that are supporting a buy, and then we also add the Bollinger Bands that is also supporting a buy. So now we have three confirmations that the market is going to buy. So with this, you can simply buy knowing that the market is either going to go up for a very, very, very long time, or it's just going to retrace. So whether it's going up very long or short, we are just going to buy or scalp and just scalp or stay in the market. Either way, we are going to win. So let's see how much we can get from this one. So in the daily time frame, as you can see, it was a little bit of a retrace after the market broke to the upside, and then it came back to retest that level. So this was more like a falling wedge in the daily time frame. So this falling wedge was broken to the upside, as you can see, and then the market came back for a retest. So in terms of take profit, let's just put it a few pips below the first area of confluence that we see. Okay, so as sure as I may be, sometimes it is so heartbreaking to just realize that the market didn't go where you were intending it to go. As you can see now, we are in $2.93 loss, which means our account can no longer hold that much. So it's either you close or you just stay strong. But however, I don't think this market is still going to continue going up, so I think closing is actually a good thing. So I'm going to close. Now we're in $2.64, but then today I'm not in the mood of raising a small account, so I think I'm just going to fund more and then trade again. So now in jump 100, I could have used this jump 100 to trade to raise this small account, because this supports a very small account. But however, I'm just going to analyze it for you so that you can just see some of the things that I'll be talking about. So not considering the Bollinger Bands, the market is at a point of resistance. So this point of resistance is actually being broken down to the upside, as you can see, is marked by that big candle, that blue candle. So this candle marks a pennant that is being broken to the upside. So with this small account, I could just trade this one and then collect as much profit as I can and then look for other trades elsewhere. But however, I'm just going to analyze it so that if you see this type of pattern in the market, you can know how to trade it. So this is how you trade it. It's just simple. It's a pennant, or it's called an ascending triangle. So if you don't know how to trade an ascending triangle, I'm going to put a link in the description box below to show you how to trade an ascending triangle. And then now I've funded $20 in my account. So with this $20 in my account, I'm going to visit Volatility 75 1 second. So in the Volatility 75 1 second, I've identified the areas. I've identified a rising wedge before the current formation that is now being in the midst of being formed. So this rising wedge happened and then it was completed as it was broken to the downside. However, we can no longer trade it, but it is still of very importance in the current formation because the market is going to respect those levels in the current price. So as you can see, the market, when the market broke to the downside, it came back for a retest and then it goes back down. So when it went back down, it failed to break at that resistance, at that support line that I've just put. So at this support line, it means there was a very, very strong support. The bulls were very strong at that point, so they could not be broken. So if the bulls could not be overpowered, it means that the bulls are actually stronger. So the market formed kind of a double bottom at that where I've put the shadow zone, the second shadow zone there. So this double bottom marks the power of the bulls. It means that the market is going to go up and the bulls are actually stronger than the bears. And however, there was another formation that was formed inside that chart. This is known as the Quasimodo. If you don't know how to trade the Quasimodo, I'm going to put a link again in the description box below. So this is the Quasimodo setup. So the Quasimodo setup was actually formed and completed. So we are just going to trade along the Quasimodo, which was already formed. So in other words, we are not really trading the Quasimodo because it has already been formed. But however, it means that the bulls had power and they still have power in the market. So at this point, the market is going to buy. So I'm going to add more positions. So with this small account, we cannot put a lot of positions. And also in terms of take profit, you can always put it at the next head of confluence, like I always say. So right now we are in $9. We can actually close because we're just trying to build this account, and then we can enter again. So I'm just going to close and then enter again with a big account so that we grow the account bit by bit. So it's still the same chart. I'm just going to enter and then scalp a little bit and then close again. This TP, you can always put it at that line where I've said earlier. Then now we're in $37 from $20, which is a lot. So it is very difficult to spot a sniper entry at this point. However, if you spot it, it means you can go very long while you are riding it, and you can collect as much profit as you can. Now we're in $40. We have actually doubled the account, but then the market is retracing, so it means we have to wait a little bit longer. Now I've closed in $35, but I'm going to enter again. I'm just trying to secure the profit that I've collected, and then I enter again. Growing it bit by bit, you can also do the same. Currently, the market is trying to fight back. The bears are trying to fight back, but however, the bulls are just going to continue in the power. So you just have to be patient. And then now our account is in $50, so it means I've actually doubled the account, which is very, very good. Also, it brings positive vibes on this one. And then now I've closed in $50, so it means I have $30 profit now. So I'm just building the account a bit by bit, and then let's see if we can enter again. Okay, now we've entered again with our account. It's still the same trade. We're just building the account using the same chart, which is volatility 75 1 second. It's still the same formation. We're just entering and closing. Just trying to secure the profit. This allows me to enter more position with even bigger lots, because I've actually secured the profit that I've collected. So this is the advantage that it has. It works very good in boom and crash. Now our account is in $64. I can actually close and then leave the market. Now in 70. This is a lot, guys, considering we had a $20 account. So now we're in $71. So I'm just going to continue growing this account bit by bit. It is actually fun to trade and grow a very small account, but however, sometimes it can be very stressful because you can just blow. But however, I think I've had enough of volatility 75. 1 second. Now I'm visiting the volatility 75. This is more volatile. This is one of the most volatile pairs in volatilities, in synthetic indices. So if you want to trade synthetic indices, you might want to consider trading in using Deriv. Deriv is a very good broker. You can trade over the weekend. You can also trade synthetic indices, and also Forex majors and Forex minors. They are also found in Deriv. So Deriv is actually good because it has a very, very, very wide variety of choices of pairs you can trade. So I'm going to explain why I've bought in the volatility 75. So in volatility 75, I've identified a falling wedge, or rather a flag. So this flag was broken to the upside, as you can see. So the market is just going to touch at that shadow zone, and then it comes back into the trade, or it even continues going high. So I'm just going to scalp a little bit, and then I leave the market, because what I know is the market is going up. So another formation that you can use is actually known as the rally base rally. So this rally base rally, it means the market went up and then it formed a consolidation where I've put the shadow zone there, and then it continued going up. So this is the rally, and then the consolidation is the base, and then it did another rally. So this is a rally based rally formation. You can always use it. It is very, very powerful. So if I had gone full margin on this one, right now I might have been in $50 profit or so, but then I'm trying to protect this account, so it is actually safer to apply risk management on this one. So in terms of take profit, we always put it at the next area of confluence that we see. At this point, it is the major resistance level that is at the top, where I've put the shadow zone there. So our account is in $77 profit. So this is a lot because we had a $21 account. So you can actually close and then enjoy your profit. But however, I think I'm going to continue trading this account. I would really consider myself a happy trader if I reach 1,000. So now we visit Jump 75. So in Jump 75 index, the first thing that we have to do is to mark the major areas of resistance and the major areas of support. So these areas are very important in your trading decisions because they actually tell you where to buy and where to sell. And there are areas that might affect the price for some time before the market is decided where it is going. So these areas, as you can see, I've put all the shadow zones at the areas of confluence. So I'm going to buy with this account because the market is now breaking the third area of confluence to the upside. So this chart, it is known as the cup. So the cup is usually in two different forms. So the cup might form what we call the cup and holder, as marked by those trend lines that I'm drawing. So this forms a falling wedge after the cup, and then the market goes up like as marked by that arrow. But however, I'm not going to be patient enough to wait for that holder. If it doesn't come, it means that I'll be left out. So I'm just going to trade. If the market does that cup, that holder, sorry, I'm just going to continue holding because the market will be going down. But however, what I know is the market is going to go up. So after the market goes up, I'm just going to collect my profit and then leave the market. Now I'm in $6 profit, which is a lot. And then after some time, we are in $966. So this is a lot because this was a sniper entry. The sooner I entered the market continued going up until it reached that 990 something profit. So I'm going to show you how much I earned. As you can see, as marked by that chart, the market continued going up. So the market just retraced a little bit and then continued going up. So there wasn't much of a retracement to the downside. It means it was more of a sniper entry. I didn't waste much time in loss. I just started in profit and continued going up. So this is a lot where we are in $74
and then now we're in 1,000. But I'm going to hold because the market showed that the bulls are very much in power, because the bears couldn't even create a holder, a falling wedge that it was supposed to form, as I have said earlier. So it means the bulls are actually very strong, and they're going to continue going up. They're going to push the market very high, and then I'm going to ride with them. And also in terms of take profit, there is a very hidden area of confluence to the left side. So I'm just going to put the take profit over there. So if you don't know how to trade a cup and holder, or rather just a cup, I'm going to put another link in the description box below. I'm going to, in that video I explained how to trade a cup. So if the cup formation was not enough for you, you can just draw another trend line that was broken to the upside. So after the breakout, the market did a little bit of a retest and then continued going up. And then now we are in $3,069, which is a lot considering we were a $74 account. So we were able to pull a very, very, very big trade with just a $74 account. It means if the market had just retraced a little bit, I would have blown. And then now, as you can see, we are actually going to hit the take profit, but then the market is manipulated. It is never going to reach that TP. But however, I can just close and then take my profit and then leave the market manually. I won't have to wait for that TP to be reached. As you can see, I'm actually going to close. So this was helped by those positions that I increased the lot. As you can see, I had 0.5 lot sizes that I had put, so it helped me a lot to gain a lot. So this was kind of a full margin. If the market had retraced a little bit, I would have lost this trade, but however, I was lucky enough. And then now I'm closing. Now we're in $2,853, and then I'm going to look for another trade elsewhere. So I have visited the Volatility 51 second. So in the Volatility 51 second, there was more of a bearish pattern or a bearish trend. So the market is actually falling from the upside to the downside, but however, there was also another cup. So this one is known as the rounding bottom. So the rounding bottom is more like a cup. It means that the market forms a round at the bottom and then continues going up. So if you don't know how to trade this, I'm going to do another video of how to trade a rounding bottom. So it's a very, very powerful strategy. The market can even fake you to break to the downside, but then it will continue going up. As you can see, this rounding bottom was followed by a falling wedge. So this is what we call a cup and holder. So it has formed the cup, and then now it is forming the holder. But then in the holder, it is more like a falling wedge. The holder is more like a falling wedge. So as we all know, a falling wedge usually breaks to the upside. So this one is broken to the downside. If the market breaks to if this pattern breaks to the downside, it means it has to go back into the trend and even break to the upside. So I'm just going to enter my buys and then wait for the market to go back into the trend and then going up. So let's enter and then see what we can get from this one. I'm very sure of this one. I've put my positions and now I've increased to 0.4. And also, mind you, this is a very volatile trade, so you might want to consider risk management before entering with very big loads. And then now we are in 1050, which is a lot. Our account is now in 4000, which is a lot. I'm just going to continue holding because I believe the market is still a long way to go. And then now we're in 6600 something, so this is a lot. Let me show you how the market went very up. As you can see, the market went back into the trend, so the market is actually going to continue going up back into the trend. So as you can see, in terms of take profit, you can put it at the higher high that was created before the channel was formed or before the falling wedge was formed. Then now we are in 7200 profit. This is a lot considering our account was very small, so it is actually safer to close and then just go and enjoy the profit elsewhere. You can actually withdraw and then you just use the money for something else, because you wouldn't wanna risk this very big account trading it again. So this is a lot. These were the 2 sniper entries that I managed to get today, because I didn't spend a lot of time in loss. The sooner I entered, the market just started going in my direction that I had intended. And then now it's time to close. So this is it. Let me know what you think in the comment section below. Please don't forget to subscribe, hit the notification bell so you don't miss out when there is an update. Also, you can link with me in Telegram. I'm going to put the link in the description box below.